Is working forever becoming the new American retirement plan? For many middle-class Americans, it's not just a choice, it's a reality that they expect to face in the years to come. Before we begin, remember to like this video and subscribe for more economic updates. According to a recent survey by Transamerica Center for Retirement Studies, roughly half of middle-class Americans who are still working plan to keep working beyond age 65. For its study, Transamerica defines middle class as Americans earning between $50,000 and $200,000 per year. That earnings range accounts for 55% of the country. And 80% of them say financial pressures are among the reasons why they plan to keep working. According to the Transamerica survey, middle-class households currently have a median retirement account value of just $66,000. That's not even 5% of the $1.5 million that workers say they need to retire comfortably, according to research published by Northwestern Mutual. One retired couple told CBS News they're still working because of financial stress. It's not really a retirement. It's working every day. Experts suggest that there are numerous reasons why Americans are increasingly plagued by financial unviability in their retirement years, including that the nation's economic output has fallen sharply since the beginning of this century. In the 24 years leading up to year 2000, U.S. GDP growth averaged roughly 3.2% annually. Since that time, it has averaged about 2% annually, nearly 40% less per year. According to some economists, one of the reasons for the diminished output is that the economy now is driven less by productive jobs in private industry and more by government spending. While the number of private workers increased by 133,000 in September, the number of government workers surged by an almost incomprehensible 785,000 jobs. Commenting on the startling figure, economist Peter Schiff said, according to the household survey, 86% of the jobs created in September were government jobs. Without the seasonal adjustment, 100% were government jobs. How convenient. These are non-productive jobs that are paid for by either taxes or inflation. Given the history of U.S. economic growth since the 1970s, it's not surprising that equities were the best-performing assets in the last quarter of the 20th century. So far this century, one that has normalized annual budget deficits in the trillions and seen the national debt rise sixfold to nearly $36 trillion, commodities and other real assets have been among the best performers. This includes gold and silver. In fact, since 2001, the price of gold has appreciated more than 800%, making it one of the best performing assets of the millennium up to this point. In one instance, Bloomberg economists recently concluded gold is now a better performing long-term safe haven than U.S. Treasuries due to the metal's significant outperformance of government bonds in what has been a high inflation, high rate environment. Strategists at Bank of America determined that commodities, including precious metals, have outperformed bonds to such a degree that they recently proposed commodities replace bonds as the 40% allocation in the classic 60-40 portfolio model. In the assessment of Bank of America strategists, the commodity secular bull market in the 2020s is just getting started as debt, deficits, demographics, reverse globalization, AI, and net zero policies are all inflationary. In her comments on the growing prospect of Americans spending their retirement years on the job, Transamerica Institute CEO Catherine Collinson had this to say: "Many are saving for retirement, but the question is whether they are saving enough. The real question is how to protect what they've saved as they try to navigate an increasingly uncertain road to retirement. With global economic shifts, many experts now point to real assets as a new path forward. Determining how to create retirement security is up to each of us. Until next time.